Welcome to the Canadian Investors Course Session 16 Measurements Commentary. Please review page 2, Terms of Use and Disclaimer. Here we got the CFO doing fire-eating tricks on the boardroom table to avoid having to present his financials. So the CEO says, or the chairman of the board says, "Very impressive, Randall. We'd still like to see the financial report." Examining further a few of the reported measurements. Let's look at some relationship charts. On a personal note to you, sometimes you have to be a detective to be a good investor. A trusted wealth professional will express both good and bad data. A good IROC advisor will assess all types of research and will tend to take an open-minded approach to the research and will continuously verify data to properly make portfolio decisions. Be careful of advisors that continuously show only positive data that's internally generated by their firm or from some mutual fund company source. A good trusted wealth professional, will tend to buy external research as well as using their own research and seek further in-depth research. In other words, they're constantly researching. A good advisor might spend a couple of hours a day reading research reports and evaluating their holdings. Let's look at CPI, year-to-year growth. This is the Consumer Price Index. It's the broadest measure of consumer price inflation for goods and services, and it's published by the Bureau of Labor Statistics. There have been some changes in the calculation by the government, and the purpose of those calculations are obviously to keep CPI in check. In the chart below, Shadow Stats shows CPI estimates based on pre-1990 official methodology for computing CPI. If you decide whether your true CPI is based on your day-to-day living expenses. So you can see the official CPI, which is low, compared to the CPI, which was based on 1990 parameters. The people doing these calculations have all sorts of ways of adjusting the numbers. They play with housing numbers, they play with rental numbers, they play with revaluing assets based on their usability. So for example, a computer is viewed as being much cheaper today than it was 10 years ago because it offers 10 times as much power for less money and things like that. Then there's the U3 unemployment rate, which is the monthly number reported to the public. The U6 unemployment rate is the Bureau of Labor Statistics' broadest unemployment measure, including short-term, discouraged, and other marginally attached workers, as well as those forced to work part-time because they cannot find full-time employment. These U3 over U6 statistics are available, but generally never reported by the media or the government. Shadow Stats has its own U number too. We look at the gray and red lines below. So look at the unemployment rate, the official U3 and U6 versus Shadow Statistics alternate. So the broadest is the U6, the official is the U3, and the Shadow Stats number is the blue line. So you can see the red line, the official unemployment number, shows unemployment around 4%. But the broadest one shows unemployment closer to 10%. So in other words, an awful lot of people are working maybe one day a week or part-time or something, and they're counted as employed, but in reality, they're only partially employed. And if you look at the Shadow Stats number, which has been created another way, and we don't know exactly how that's being done, but it shows a much higher unemployment rate. That shows probably tries to identify only full-time employed people. The bottom line is that the government's objective is to keep these numbers looking as positive as possible because it makes it a lot easier to manage everything that government has to do. Relationship charts. Many analysts in the investment industry compare relationships between data. There are fairly consistent relationships that exist, and here are some of those. First of all, the relationship between the US dollar index and the CRB index, the commodities index. Typically, when the US dollar is going up, the commodities will be going down, and when the commodities are going down, the US dollar will be going up. And this chart represents that rather elegantly. You can see that the two charts are very close to the inverse of each other. Then there's the bond index versus like a bond fund, and compare that to bond yields. And again, you can see that the bond fund is doing very well when the yields are falling. So you wonder what's going to happen to the bond funds when yields start to climb, as they are starting to do now. Here we are sitting in the summer of 2017. Janet Yellen has raised rates twice. It looks like she'll do it at least one more time this year. Then there's margin debt versus the market. And it's interesting to see what a strong correlation there is between the margin debt on the New York Stock Exchange and the S&P 500. This is the amount of money people have borrowed to invest. There is much more data to scrutinize and relationships to observe. A good trusted wealth professional not only has all this information, they pay attention to it. Each month, Trusted Wealth Professionals will update a few of these measurements in our Golden Swan newsletter, and you're welcome to sign up to this newsletter for free. Rule your wealth. Even if you don't decide to go to a Trusted Wealth Professional at first, this is useful information that you can obtain simply by logging in on it. Thanks for paying attention. That's the end of this commentary.